The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 22nd, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a wonderful Wednesday. Let's make sure that you and I, that we do everything we can to have a terrific Thursday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. When we make that one little shift, well, it actually becomes a seismic shift out there. So always remember, life happens for us. That means we can always find the gift in every set of circumstance that the universe is going to throw at us. We're going to go find those gifts today because the universe has thrown Mario Draghi at us. So we're going to see how the market is reacting to that. But most importantly, folks, I am grateful for your presence here today. I'm here to serve you. So if you'd like to, go ahead and pick up that phone. Give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. That way you and I, we can go dissect. I like how Tommy put that together. We can go dissect and bisect whatever stock chart, whatever market it is that you want. This is Terrific Thursday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow Futures trading up about 95 points, trading out at 17,580 and change. The S&P Futures up 12.5, trading out at 2,039. NASDAQ, that's up 12 points. The NASDAQ up about 22 points. She's trading at 42.05. Interesting move here in the euro, so we'll check in on that. We'll take a look at the currencies. We'll take a look at the hard currencies, Goldilocks and silver. Gold's up about $4, trading at $12.97. Silver's up 6 pennies at $18.26. Light sweet crude back 10 cents right now. She's trading at $47.69. You know, let's do what we've done here for the past couple of days. Let's go take a look at let's go take a look at the world markets, and we'll jump right into our markets out here. But across the world, across the globe, last night in Asia, sea of green. Of course, the U.S. really handed the ball off pretty well. It was Europe that closed up nicely yesterday. Then you had, our markets close up. You had and then last night, Asia again. Now, right now, over in Europe, the DAX is up 48 points. We know that the DAX, let's start off with the DAX because let's take a look at all the things that we know. So let's simply just turn off the noise of what Mario Draghi did or didn't do out here. Let's take a look at the stock information, the charts that we've got at our fingertips right now to get a feel for what's going on. What we know about the DAX, this blue line on my chart, hopefully you're watching this on TigerTV. That's a key line out here. That happens to be a area of resistance that the DAX broke through, 10,033.74. You're trading at 10,350 as we speak right now. The DAX is going to head up to the top of this little rising price channel out here. What's that price point? There's even an A to B equals C that takes you above this level. But the 10,600-ish area is really its next stop. It has not reacted negatively to Mario Draghi's comments. It's something that you've got to focus on here, okay, because when we take a look at these markets, we are connected. We're absolutely connected. Hey, look at TFNN. We're connected around the world. We've got listeners around the world listening to us. The DAX is in all-out bullish mode. No question about it. Hey, let's go take a look at the FTSE out here. The FTSE is impressive. It was very impressive yesterday. Still impressive today. Now, what it's done here, it's made that 100% move of a move. So it's a natural area of resistance. If it can get above this area, which is 67.73, that happens to be it's November 21st swing point. That would be special. And that would be special. Of course, who was it that said that would be special? That was from a Saturday Night Live, right? The church lady, right? Wasn't that who played that role? But in any event here, I'll tell you who's playing the role inside the FTSE. It's going to be that swing point from November 21st out here. here. And any close today above 67.73. That says the FTSE is going to go ahead and attack that 69.50 level. Of course, that 69.50, that is its consolidation high, very much like the Russell 2000. Could it be that we have the FTSE and the Russell 2000 break above their long-term consolidation highs out here, and then really lifting the market? Well, I won't say lifting the market higher, but certainly giving us that confirmation of a market that's going to break out. In other words, the low for 2015 took place last Friday. Yeah. And you know I've been calling for a low for quite some time out here. This is beyond the October low. So that low came in last Friday. Now, if we also take a look at the FTSE, it's done the 1 to 1 A to B equals CD to the upside. That price projection was 68.05. So no reason to not say, hey, it can't break above that high, and jump all in, all short or something like that. There's no message here, at least not yet. No idea how the day plays out. Right now, it has responded positively to Draghi's news out here, and we're not going to get too caught up into the mere fact of what their asset purchase program is, whether it encompasses stuff from the past or the future. It doesn't really matter. It's really about what is the markets doing. What are the markets doing? We're going to turn off the news as if the news didn't exist, and what are they doing out here? So it looks to me like the FTSE is headed to the highs out there, 69.50. We'll see what happens when it gets up there. With regard to what's going on in Asia, the big stink was made about the Shanghai, as it had dropped off about 7-8%, but it's already back up at its highs out here. So today it repaired that broken window. That means this gap down took place at 3,500.58, and it closed at 3503.56. That level of resistance, that window has closed. You're back inside that swing point. It says that you at least go test the highs. So if the Shanghai was really in bad shape and was going to start the turmoil to the downside, it wouldn't be visiting its highs out here. And that's where it's at. 36.55 is going to be a real key number. Getting above that will be very similar to the FTSE, to the Russell 2000, the IWM breaking above its consolidation. In the case here of the Shanghai, we'll put this on a monthly chart. You'll be able to see the swing point area that it's taking on. The top of its consolidation, and that's really back in August of 2009 as well as in June of 2008. So that's going to be a real key level, 36.55 for it to deal with. But in this chart here, it's all out bullish. There's no question about it. It's got resistance at 36.55 out here. That's inside the that's inside over in China, what supposedly is the weak link out here. If we take a look at the Hang Seng, up another 170 points last night. Come on, populate my chart, would you? Oh, what did I do? Delete it? It looks like, oh, man, all the work that I had on that thing. Son of a gun. I got to be careful when I hit those keys out there. Oh, well, so much. Hey, I always say start with a clean chart, right? I think when you delete it, all of the other work that I had done on here just disappears. And that's the real bummer out there. In any event, so be it. We just got to redo our work. But, hey, that's okay. Every artist, that's the deal. Let me just clean this template up here just so I get this with a number of the tools that we're going to take a look at. Okay. Now, with regard to this is the monthly chart. I want to switch over to the daily. Well, look at the monthly chart out here. You can just see, slightly higher lows out here. Just a gradual climb inside the Hang Seng as we take a look at its monthly chart out here. Let me put up the daily, but we're not seeing anything that is bearish. In fact, if anything, it's up above the resistance levels out here. That really, resistance, we can say that November 17th high. So this actually, if I had volume, this could be could have taken out the B point of A to B equals CD to the upside. And that's inside the Hang Seng. Let's go finish this off. Take a look at the Nikkei out here. The Nikkei is right now, closed out at 17,329 out here in the marketplace. Had a nice little hammer candle back here on January 16th. The Nikkei should continue to move higher. Probably its next move. Well, if we take a look at retracement levels here. Then we'll go take a look at our markets because there's some interesting things going on inside our markets as well out here. But always, I think, good to get a perspective as to what's going on around the world. 17,481 is the next stop on the elevator on the way up inside of the Nikkei. Now, let's switch over to our markets, see what we've got going on out here. We're going to take a look at the daily futures contracts because what you're going to see is a couple of interesting things. You're going to see two breakouts. Let's start with the S&P 500 out here, the S&P futures. What we did here yesterday was we put in a couple of different lines out here. We put, in fact, let me do this. Let me turn off the retracement levels just for the moment. We'll turn them back on here momentarily, but we're going to turn those off. So we're just taking a look at two different trend lines. One was the price channel. Those are the yellow diagonal lines going on my screen that are on my screen right now. So we saw price yesterday inside the S&P futures close above that level. Guess what? We're above even the trend line. Even if I went from the trend line, that's the white diagonal line going across my screen. Of course, it's a daily chart, so I don't know where things are going to close today. I only know what we're looking at here at 9:16. It's not bearish, that is for sure. Can it turn into bearish? It absolutely can. I cannot control what the market is going to do. But what we can take a look at is what is the market doing right now. And what the S&P futures are doing right now is they've broken above this little downtrend that it's been in since the highs out here back in December 29th, December 30th. That looks bullish to me. In fact, what you really could be looking at here is a very large A to B equals CD to the upside inside of the S&P futures. If we take a look at what that looks like out here, in fact, this evening I'm going to be doing, 4:15 this afternoon, I'm going to be doing a workshop on behalf of Ninja Trader. It's going to be taking a look at the A to B equals CD pattern. If you would like to attend that workshop, just come on over to the homepage at TFNN.com. Under breaking news, you will see, it says free workshop, free webinar with Steve Rhodes. Go ahead and sign up for that. I believe it's also, may also be archived, but go ahead and sign up for that. And that's at 4:15, so about an hour workshop this evening. So it looks to me like what the ES Mini is going to do is head up to the 2228 level. Of course, it's first got to clear this December 29th area, but what we do know is that this downtrend that has been in place inside the S&P futures, that has broken through it. If we take a look at what else has broken through it, well, how about the NASDAQ out here? NASDAQ, same kind of thing. I'm going to turn off the retracements out here. If we take a look at the retracements, let me turn off the TAS profiles as well just for the moment. And if we take a look at it, you've got the NASDAQ breaking through its descending trend line. It did that yesterday. You've got some additional conviction today. And I'm sorry, the channel line. Those are the yellow lines on my screen. And now we take a look at the trend line, short-term trend line. Nonetheless, price is traveling above that. So long as it closes above that, the trend to the downside is over. And it's over. Well, I can't say markets are going to go up and down. It's been a trader's paradise out there from an intraday standpoint, and you can expect a lot of the same out there. But what I would say is this candle right here, this was January the 16th. This was last Friday. That is the low. That's the low for 2015 out there. That is the bullish take on the markets. And until we see any other information, that's the information we're going to go with. Now, let's go take a look at the Dow futures. So we got two of the four that we pay attention to that have broken through their descending price channel. The Dow is doing everything it can. They consider yesterday the poor performance that was turned in by IBM and the weighting that IBM has with inside the Dow. Pretty impressive for what the Dow actually did. It fended off all the selling, fended off the bears. Now what it's trying to do is fend off that descending price channel. So we got two of the four that were in these now. I don't recall if we had a descending price channel inside the Russell 2000. I'm going to think we got 2/3 of it. And so today, if we see the Dow futures close above where they're trading right now, they're trading right now into it, which is 17,585. So any close above that, that's at 17,697 is next up on the list, and 17,852, then 18,051. Yes, that low from last, I consider that low from last Friday to be pretty important. But right now, the Dow futures, they haven't joined in, but, you know, for the most part, they have done pretty darn well. PDW. When we get back, let's go take a look at the currency pair. So let's go see what's going on with the euro, US dollar. Let's go see what's going on with Goldilocks and silver and anything else that you'd like. All you got to do is just pick up that phone and give us a call. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and long live the King Dollar, the king of beers out here to the upside, up 530 ticks as we speak, trading out around the 93.67 level. I've got a 10-minute delay on that, but let's go take a look at this. So this is now taken out its most recent high. That was from the trading session of January 16th, 93.56 out here. So that's trading out right around 93.64. So that continues to move to the upside out here. Of course, that is its biggest sponsor happens to be the euro. Now, the euro, after Mario Draghi's comments out here, we're going to look at the euro futures. Excuse me. That way we've got the live active data out here. And so this is kind of interesting as I take a look at it. I don't know if it's interesting to you or not. My expectation would have been, and announcing a 60 billion euro monthly bond buyback. But of course, the details are like, hey, it'll be on the website, in an hour or so. So while we're on the show, I think that might be maybe it's going to be on the website. I got to convert ECB time to Eastern Standard Time out here, but I do think maybe it's on in about 5 minutes. So it's going to be interesting, the first half hour of trading, maybe first hour of trading, to get a real feel as to what Super Mario, the king of talk out there, the king of speak, see what's really in it. But at this stage of the game, the euro hasn't exactly fallen apart. In fact, the euro futures, they have not taken out the lows from January 16th. 114.67 is the number. So far, the low out here has been 114.69. My expectation would have been, and this is where I've been discussing really only over the course of the last several days, has the move lower that we've seen in the euro, has everything really been priced in? And we're about to see, the candle formation isn't out there yet, but are we about to see a move higher? Whether it's a bounce, heck, a dead cat bounce alone would be a significant move higher inside of the euro. So what I see that is interesting here is that, and the price of gold has been moving in a directional correlation to the euro out here. Of course, it's an inverse relationship. But in any event, the euro hasn't fallen apart. So as it wouldn't be Schultzy, it would be Colonel Klink who would say very interesting out there, and I do find it very interesting. Now let's go take a look at the metals market and see what they're doing out here. As we take a look at gold, trading out right now at $13.02, up $8.80 out here. That is really trading at the 1.272 and the 0.786 retracement level. So we saw a little bit of a higher high yesterday. That high has not been taken out. Is there any meaning behind that? Let's just trade the stock chart. What we do know is we've got a potential 0.786 Gartley sell. It is not out there just yet. I would mean it's not confirmed. It won't be confirmed until we see some kind of bearish reversal signal. That is not in the cards. Without that being in the cards, it says that Goldilocks can easily trade up to that 1340 level. That becomes your 1 to 1.618, A to B equals CD, and makes a 100% move of a move. So in light of any kind of bearish reversal signal inside of gold, that's where she is headed to. Now, that ought to make the folks that are inside the mining activities sleep a little bit easier or wake a little bit easier this morning. The reason is because if we take a look at the XAU, the HUI, the GDX, the whole lot of them, yesterday was yet a second key reversal session over the course of the last week or so. I believe, well, let me see, was this one? This is the XAU looking at January 13th high, 79.94, and you had 79.90. No, this is the first key reversal session yesterday. So you're not out of the woods here just yet. You want to see gold take out yesterday's high, and you certainly want to see a close above yesterday's high inside of the XAU. Key reversal sessions tend to be things worth certainly noting. Doesn't mean that the market needs to fall from here, but boy, when you start to get up into completions of patterns, which is what we've got inside the XAU, you've got an A to B equals CD pattern here. If we take a look at it, your A point being down here on November the 5th, your B point out here is we're going to use, looks like November 25th. Your C point down here, December 16th. You've made the 1 to 1.272. A to B equals CD. Sounds a lot like gold, does it not? And therefore, and you had a key reversal. We didn't see that key reversal yesterday inside of gold, but knowing the directional correlation between these two, you want to see that high taken out. You need to see beyond that wall. Of course, you need to see the XAU get above yesterday's high out there, and that would bode well because it would take out a potential reversal area. That's what's going on there. If we take a look at silver here right now, silver's trading up 17 pennies, trading out at 18.37. If we take a look at where is the A to B equals CD pattern inside of silver, our A point's going to be that low on December 1st. Our B point's going to be up here on December the 10th. Your C point is going to be, we'll just call it down here around January 2nd. Looks like silver wants to get up to 1877. That would be your 0.618 retracement and a 1 to 1. A to B equals CD. What a beautiful thing, that lightning bolt pattern. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the dollar 54-point trade at 17,609. S&P is up 8 at 2040. Composite up 15 points at 4683. Russell 2000 waking up. She's up $6. Trading out at 1172. The DAX is up 35. FTSE's up 17 points. Gold is up $5. Silver up 13 pennies. Light sweet crude back 14 cents. So light sweet crude continuing to try to hammer out a bottom. Moving to the upside this morning. City National Corp out here up 18%. I think that's on a buyout. of one of the other banks out there. Union Pacific, UNP up a nice 4%. It's more 3.5%, up $3.96. Amazon up $4, a little over 1%. Google up $4, about a quarter, 0.75% out here. Southwest Airlines, love. You got to love that ticker symbol. LUV up 5%, up $2. eBay out with earnings after the bell last night. They're up 4%, up a couple of bucks out here. Goldman Sachs up $1.45. United Rentals up about $1.29. To the downside out here, there's some equities that are truly being trashed. You've got the F5 networks, FFIV down 11.5%, off $14. Lands End down 23% this morning, off 11.84. SanDisk, which has gapped down, I think it was last week or the week before, pretty big, down again this morning, off about 7%, off $5.50 out here. Shire PLC off $5. Precision Cast Parts, PCP down a couple of percent, down 4.75. BioMarin Pharmaceuticals off 3%, American Express off 3.5%. So let's start taking a look at some of the equities. Let's let the market kind of do its thing here for a bit, go back and forth, not anything unusual. And let's take a look at a couple of these stocks that are just truly being trashed, like F5 Networks, FFIV. So gapping down with volume, capping down into the October 10th. Its swing point looks like it's October 10th, October 13th out here. The volume, we'll use that October 10th area. That had volume of 2.7 million shares. You've done 1.5 already. It's trading inside that swing. That low, by the way, is 106.86. Let me pull this back just a tad further, see if there's anything else outside here. There is. So if that level breaks, this will find or try to find some support. Well, I'm going to go ahead and use this candle right around the 101 area. So any close below, we call it 106.86 is probably the 101 area where it finds support. It has in the past. We'll see if it can do that again. That is F5 Networks. Also to the downside this morning, you got Lands End. LE is the ticker symbol. That's off by 24% out here. My guess is they're out with numbers. I just don't see them on my screen out here, but down 23%. That is a big. Now, where is this? This is moving right back into where it last broke out. So we take a look at, again, ticker symbol LE. That breakout wide price spread, accelerated volume out here. That was on the trading session of September the 10th. There were 2.9 million shares on that day. So far this morning, you've done 465,000 shares, only 7 minutes of trading, so that's pretty good volume. Lands End ought to find support somewhere between 36.07 and 34.24 out here. Again, ticker symbol LE. If we take a look at SanDisk, SNDK, this thing got trashed just a week ago or so with volume coming out of it. That was volume of 23 million shares. The downside on January the 12th, gapping down again. And it's not a 3-gap play. So it is not an exhaustion gap. Let's go see what this is trading into. This is trading all the way back to where it broke out. That would say that SanDisk very likely at a minimum headed down to test that area, which is about $73.11. Now the swing down there has got volume of 6 million shares. You've done 2.2 million shares today. SanDisk not looking good at all. SNDK. Let's go take a look at... let's see what else. We're looking at things going to the downside here, just for the moment. But we'll switch over. Let's look at Discover. Discover Financial Services, DFS, down about 6.5% out here. They generated net income of $400 million versus $602. That's a nasty miss. On I don't see the revenues out there, but nonetheless, that is a nasty miss. Let's go take a look at that ticker symbol DFS, get an idea for where this thing might be headed to, and that's a good question. So you're breaking a swing point. You're breaking the August 7, 2014 swing point. You're doing that with the volume here this morning. Let me have to put this on a weekly chart to get some kind of feel for where this thing could be headed back to. Discover Financial Services out here. So let's go do that. Let me put this on the weekly chart, see if anything pops out at us. See, we're looking for a high volume bar out here on the way down. So it's been one heck of a nice uptrend. So let's, if we take a look at it, see if this has broken its trend line out here. That trend starting all the way back from 2009. So just out of curiosity, I doubt that it's broken that trend now. It's a long ways away from that trend line out here. That's the red diagonal line on my screen. Let's see where boy, I tell you, volume wise, the problem with this equity is it doesn't have any volume till you get back into December 17th, and that's right around the $40 level. You're trading at 56.79. So, quite frankly, at that level, this would be running into that trend line, that long-term trend line out there. So that would be the current message without really taking a closer look at it. Let's go take a look at a couple things here. Moving to the upside, not too interested in City National Bank CYN. That is a buyout, I believe. Yeah, they're going to be acquired. I don't know who they're going to be. Who's Royal Bank of Canada. So let's not worry too much about that. Let's take a look at Google. GOOG. That's trading the upside here this morning, up about 1% out here. This is the weekly chart. Let me put this on a daily time frame out here. Go take a look at Google, see what's behind this move out here. So Google headed right back now to its swing points from December 29th. So, the market makes a high. Google weaker than the market, a weaker than market stock. Nonetheless, it's headed for its December 29th high. That's only got 2.2 million shares. You've done 250,000 shares here today. So Google headed there. If we take a look at its trend line, this will be curious, George, out here. Let's go see if what this is doing with relation to its trend line out here. So right now today, it's really trying to take that out with a gap up. With some decent volume. So Google may be changing its trend. That would bode well for the NDX 100 out there. All right, so now we got the market slightly in the red out here. Let's continue to take a look at some stocks that are moving to the upside. Let's take a look at Union Pacific Corp. UNP is the ticker symbol. That is up about 3%, up $3 out here. This is off of its session high. So this thing had it's trading right about where it opened. Went ahead and moved up to a high of 120.90 out here. Volume behind the move so far today, 829,000 shares. That's moving into its area here where it broke down. So this thing broke down right about here. That has acted as resistance. That's at the low from November 26. That had moved down with volume of about 5.6 million shares. So 122.41 ought to be the resistance level for Union Pacific, UNP being the ticker symbol there. Let's take a look at Crown Castle International. CCI is the ticker symbol. Let's go see what that is doing. That is also a equity that had traded a bit higher here this morning. It's trading right where it opened, which is right around the 83.84 range. Nonetheless, volume behind this move, 454,000 shares. This has already tested its swing point high. That's got about 3.5 million shares. Too early for me to do the math, but it looks to me like it's got volume moving into that swing point. That is Crown Castle International. CCI is the ticker symbol. Let's take a look at, so got some emails here. I see one question is, where do we see the VIX going? So let's go take a look at the VIX index, see what it's doing right now. You got the VIX trading flat, trading up 1 penny at 18.86 out here. Everything, when I take a look at the VIX in relation to its futures contracts, everything is getting in line for a bullish move inside of the stock market. But what is the VIX actually doing right now? What is it that you're going to pay attention to? Well, here we go as we take a look at the VIX. And today may be a key day. Tomorrow may be a key day. What we know about the VIX is that right now it's still above the 50-day exponential moving average. That is priced out at 1741. We saw the VIX this morning get down to a low of 1779. 1741 is going to be the key number for us to be watching. If you see the VIX index close below 1741, you're going to have another confirmation of a market that wants to move higher. Likewise, if this market holds or if the VIX index holds the 1741 level, continues to trade above it, you can expect a continued choppy market. So you don't get clear sailing, you don't get clear seas out here inside of the VIX index until you get below that 50-day exponential moving average. It's been moving back, it's been moving lower. That really wasn't the question out there by the person who put in that email, but it is important for us to be paying attention to where the VIX is trading. The question, where is the VIX likely to head to? Well, I would say with regard to the VIX, it would, if the market if it gets below the 50-day exponential moving average, you're probably looking at a VIX getting down towards the bottom of its Bollinger Band out here in about the $13.05 area. You're at 1867 out there. So the next stop is going to be breaking. So I don't know if the person's long, short, support what they're doing. You want to watch that 50-day exponential moving average. If you get below that, then the expectation ought to be that price should move down to the bottom of its 50-day Bollinger Band out here, and that's right now priced out about 1305. That would be my target for somebody taking a look at the VIX. If we go take a look at let's go back, see what's going on with the currency pairs out here. Let's take another quick peek here at the euro, see what it is doing. So you've got the euro still holding its own. So this thing has not fallen apart out here. So what does that say? That says, in light of this not falling apart, watch for any kind of bullish action out here, action Jackson, because you could see one heck of a nice bounce in the euro, and then you would see a pullback inside of the King of Beers, inside of the U.S. dollar index. We don't have that just now, but what I will say is this thing has not fallen apart with the announcement of the so-called big QE that is out there. So we'll go ahead and we'll keep an eye on it. No bullish reversal signal here, but that could potentially be a nice trade out there. And in the case of light sweet crude, let's go check that out. We didn't look at black gold Texas tea out here, just off 9 cents this morning, trading out at 47.70 out here. This continues to just really gradually move sideways out here. What it is continuing to do, as you can see, perhaps now maybe a key level to be watching more so than anything else is going to be the 13-day exponential moving average. That's the white line on my chart out here that has acted as resistance since September 26, I believe, was the last time that we even saw a little bit of a budge above that area. If we do see a budge above that area, that would mean closing above 49, and then that area acts as any kind of support on any kind of pullback. Then you're looking at a fairly decent bounce inside of light sweet crude. It's not there yet, but we've got a couple things to keep our eye on. With regard to natural gas, I see I've got a couple emails here asking me, hey, what's going on with natural gas out here? As we take a look at the March contract, this thing just continues to travel around its lows as well out here. I don't see any kind of long trade or anything inside of natural gas as we speak right now. I don't see a short trade, but I don't see any kind of a long trade out here inside of natural gas, NG. That was the March contract. Okay, so the Dow's down 60 points. The S&P is off 4. Composite is off 16. Russell's now slightly, well, it's down about 2 points out here. We see the ES mini trade out at 2022. I don't like a trade below that 2026 mark out there, but we'll see. We got a lot of time left in today's trading session. One of the things that certainly has caused these markets to move lower currency-wise, it is that euro-Japanese yen. So we haven't looked at that currency pair, but this thing here, this is why it's so important to see where the euro itself trades to. We can see that the euro-Japanese yen as a currency pair has begun moving lower. It has not taken out its lows out here, the lows from January 16th, but that's going to be something to keep our eye on for sure, because it really is all about the currency pairs out here. So it's currency pairs that rule the market. We can see that the euro-Japanese yen is moving lower as we speak, and therefore that is the same thing that we've got going on inside of the market out here. There's your correlation between those two. Let's take a look at what's going on inside of some of the sectors inside of the S&P. Let's go take a look at the XLF, the financial sector. Right now, she is basically flat out here. What do we know about the financials? The financials have made the 1-to-1 A to B equals CD to the downside. Had a nice little bullish reversal signal back here on January 16th. At this stage here, the financials, they are trying to form a bottom. No real sign of strength to speak of off of that bottom out here. Today is certainly going to be a test of that January 16th area. A close inside 2350 would suggest a test of that low at 2306. That's what's going on inside of the XLF. Let's look at the XLE out here. The energy sector, that's down 23 cents. That's trading out at $76.61. No bearish candle or anything along those lines out here. The XLE is just trading in what looks like a consolidation. Right now, it's in the middle of that consolidation pattern. That consolidation low being $72.51 and the high being $82. So you got a $10 consolidation inside of the energy sector. That's inside the XLE. Of course, that means lines, we ought to really see what's going on inside of ExxonMobil. It probably looks exactly like this stock chart, just simply because of the large weighting that it has. And yeah, it most certainly does. Now, with regard to ExxonMobil, I'll just look and see, is there any kind of sign of strength out here off of, there was really a sign of strength. Price, in essence, came back to that sign of strength. So we take a look at a bottom out here. There's a bottom inside of ExxonMobil December 16th. Your first sign of strength off that bottom, that was on December 19th. And we can see that what price did was it came back here and tested that level. The day before was really where price came off that bottom, tested that area back here on January 14th. Right now, we've got the Dow off 44, S&P down 4. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Flattish kind of market out here. The Dow's off 20 points. The S&P is totally flat right now. The NASDAQ is off 10 points. The Russell's down 3. Interestingly enough, the Dow Jones Transportation Index is up 1%, up 92 bucks right now, trading out at 89.81 out here. If we go take a look at the trannies, let's go see what they are doing out here, see what they're trading into. So you got the Transportation Index here. If we just simply come off of its session high from December 31st, down to the lows out here, came in on January the 14th. The price is made the 0.618 retracement. That's at the 9,000 level. You're trading at 89.79 as we speak right now. Looks like the tranny's headed for the highs, headed at least for 91.13 out here. So interesting looking chart. I'll say the other interesting chart that I would take a look at is going to be the New York Stock Exchange. This thing is still in bullish. In fact, even when the market was down at its lowest point in the morning, the New York Stock Exchange was still in bullish territory. So that's the wider swath, that's the wider breadth of the marketplace, New York Stock Exchange. So really, and again, I'm still trying to figure it out. I don't recall whether it was Schultz in Hogan's Heroes or whether it was Colonel Klink. I keep getting conflicting information. Guess I'm going to have to go watch a segment. I'll have to Google it, huh? I'll have to search for it on the internet. That's better than saying Google it. But I'll have to search for it on the internet. I'm sure there's going to be some segments out there, and I'll find out whether it was Schultz or Colonel Klink out there. But in any event, the New York Stock Exchange, a wider swath of the market, summation index still turned up, price oscillator above zero. A lot of time left in today's trading session. She went full out bullish yesterday. We'll see if it has any follow through to the upside here today. But as we speak right now, it's holding its own out there. So what are we going to focus on, pay attention to? I really think it boils down to a couple of different things. One, we go back, take a look at the VIX index. Where's that thing close? So watch that 1742 area. That will be a key level to be watching. Currency-wise, the currency pairs, the euro, Japanese yen, that's going to be key to be watching. Right now, it's taking on the lows out here from January the 16th. The break of that area, that does not bode well from a bullish move. Test and rejection, a little bit different story out there. No bullish reversal signal out here, but something for us to be paying attention to, most certainly. I'd have to say the summation index is just like we took a look at inside of the New York Stock Exchange. I'd have to say in the S&P futures, the 2026 level is going to be a key out here. A couple stocks here that I do see moving. I'll take a look at Wynn Resorts. Wynn Resorts is that equity that had the most bullish reversal signal at island bottom, still in place out here. So that island bottom candle, little hammer candle as well, that formed on December the 17th out here. This is doing everything that it can, even with all the problems over in Macau. A little island there off the coast of China, off the coast really of Hong Kong. Easy way. Well, I guess you fly into it. Now, I used to take those pontoon boats, those 007 not pontoon, what are those hydroplane pontoonish type boats. Those are kind of cool thing out there, and that's one of the ways that you can get out to Macau. In any event, you still have this bullish pattern that is held up. I wonder if it's the same thing inside of Las Vegas Sands. So both of them created that island reversal. Let's take a look at Las Vegas Sands. See if Las Vegas Sands is still intact as well. In fact, Las Vegas Sands, that looks just as has the same bullish pattern that Wynn Resorts does. So folks, if you're off to start your day, have a terrific Thursday as always. Thanks for joining us here at TFNN. Don't forget, get over to the homepage at TFNN.com. Underneath breaking news, if you would like to attend my workshop that I'll be doing tonight for the folks at Ninja Trader, you can sign up that way by clicking on the tab, free webinar with Steve Rhodes. Have a great Thursday, or stick with me for hour 2 of the Trader's Edge. We'll be up in about, we'll be up in about 8 minutes. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.